so we had a pretty decent day today. Looks like overall we had a 2.5% gain plus 1.1% over after hours, basically 3.5 points. The market today went, wait for it, down, although not by much. It went down by 0.5%. So overall, it's a break-even day for the market, a little on the downside. But as is normal, when the market performs a certain way, we usually perform better than it and in spades. So that's what we saw today. So overall, as we go through the holdings, you'll see mostly red, but you'll see some green and some very good one green. We'll talk about Viking and mostly red. PVAC went up, which has been one of our good performers. And we're going to talk about AMC in a second because they had a massive day today. Although if you're working for AMC, you may not be happy about that. And that's about it. So with that being said, one of the things that I was looking at, well, actually, let's go back to our sheet and we'll take a look and see where things stand. So we basically ran all of our stocks, did end of day pricing, which I always do. We'll talk about what we did over the weekend, sorted by upside. We have our cost basis for things that we already own something for, and then in the red, if it's in the red, it means that the current price is below what we paid for it, which means that if we buy it now, we'll actually lower our cost basis. So if you're new to these videos, just understand that is our primary metric. So when we go to our holdings, we have our cost basis here, and we want to lower that as much as possible so that when the market rebounds, you have the greatest bounce back and you make the most amount of money. That's what rich people do to get rich during downtimes like this. So with that being said, we'll talk about Yuko today. We're going to talk about, let's see, what are the other ones we have? Yuko, AMC, and Viking. Oop, that's Joe Rogan, one of my favorites. All right, so by the way, he was interviewing Elon Musk. It's a great interview. Joe Rogan, 1470. If you have a chance, definitely watch that one. So that wasn't meant to be part of the video, but it's a great episode. All right, so we're going to talk about Yuko, AMC, and Viking. So anyway, I sorted these by upside. The ones here, just as a reminder, they're green, are all ones that I went to 4 different. Let's do this. All right, 4 different, basically analyst sites. So one of them is Yahoo Finance, one of them is MarketWatch, one of them is MarketBeat, which is different, and one of them is CNN Money. So we're not going to go into those, but basically I looked at those 4 and tried to get a consensus on, no, we'll keep that because we're going to come back to that. All right, so we tried to get a consensus on what are the ones that had clear buying signs on it, where all the analysts are saying buy. So all the ones in green, we see that. And I took a consensus price as far as their target price, put it in here, and we have the ratio from basically this number divided by the current price. And the target price is usually going to be a shorter range price versus our February 20th when the market cratered price. So with that being said, the top performers up here, for the most part, really didn't have a whole lot of top rating. So we have an exception for RWT, which is Redwood Trust, which is a REIT. We have Norwegian Cruise Lines at 59 and Helix at 56. But that's about it, and that's not really all that fantastic. And we can also include 2 harbors on this too, but again, that's a REIT. And when I looked at this one, I decided I didn't want to buy into that because we're basically $1.25, which is a decent amount. It's about a third over our cost basis. So we want to keep that cost basis down where we can. We definitely do want to get stocks that move up. So the higher up here, the better. But we want to keep that cost basis down. Redwood Trust is the same thing. They're up even more over the cost basis. So I said no to that. So if you exclude those in, the highest performing one is Norwegian, which we're going to talk about today on why we're not investing more in that one. It's nothing bad about Norwegian. I think they're going to be more than fine, but we're going to talk about that one. And then Dave & Buster's, which I kind of had a realization on that today as well. So we will, let's get Dave and we have Dave and Buster's up here because I already own it. All right. So with that being said, I looked at Ikagi, which by the way is the European airline conglomerate. They own Vueling, British Airways, Aer Lingus, a few others. And they're 47 cents below our cost basis. They have an 87% rating and a decent target upside in the short term. So we thought, okay, well, right now we own $641. So if we look at that, that's in our blue right here, which means the blue ones represent ones that we don't have a whole lot of investment in. So I thought, okay, this is a good time to put an investment in that. We have a great rated stock. Everybody's saying buy it. It's actually below what we paid for it, so we can get in even lower. And at the same time, it's blue, so we need to even out our portfolio if we can. So we went ahead and put a limit order in of $1,600 for that one. All right, as we go down, we went down to Every, which again, I love this one. This one is 100% analyst buy, so everybody's saying buy it. And basically, this company does ATM and cash transaction services for casinos in Vegas. So as soon as the casinos start opening up, this one is going to explode. So we're really going to focus on making sure that we have as much of this as we can without negatively impacting our cost basis over here. So I said, okay, I'm going to put a little bit more in, not a ton more, because right now we have 5,500, which is good. That's a great stock to have 5,500 in. We'll put another 900 in there at 460, which means it only needs to drop 23 cents. And the same thing with Ikagi. It's at 466. I want to get this a little bit more just because I like where the stock is, so I'm only asking for it to drop 6 cents. So that one's going to fill definitely first. From here, we look at one that I've looked at from the very, very beginning, but it actually went up a little bit. And we actually used to own this Red Rock Resorts one, RRR. This was one that we bought in. Do we own that one? I swear I thought we owned that one. Okay, maybe we didn't. All right, you got me curious here. Let's take a look here. I mean, my chart's saying I never owned it, but it'll tell me. Maybe I wanted to own it, and maybe I canceled the limit orders. So, all right, 60% buy. Yeah, I put it in, but then changed my mind and put the money elsewhere. All right, so with that being said, this one's been moving up. I've noticed it being kind of moving up and up and up and up a little bit here and there. So now it's almost at 3, has a 60% buy like we just saw, and I figure that's going to pair really well with Every, which is our casino stock right there, the financial transaction stock. And I've stayed at Red Rock. It's a great resort, and I don't think they're going to have a problem at all. So, and it's off the strip, so who knows? That might actually help them, believe it or not. So they're currently at 10.11. I put a limit order of 975. Just put $1,000 in there. Kind of wade in, in the shallow end of the pool, but we'll go from there. From there, I think that's all we're doing on that side. Now, as far as our holdings, we'll get into that in a second. So we have these 3 that we just talked about. Viking Therapeutics, which I really like. We went ahead and put a cancel on this, not necessarily because we don't like it, because I actually do like it a ton, but because it actually had a really good day today. It went up 11%, it almost went up $1, and I had a limit order in for 630, but it's now sitting here at 709. So it's not going to get filled for a while. I mean, even the limit order I had here got partially filled because we priced it really well. So there's no point in having this sit around and waste available money. So I just went ahead and canceled it, knowing that I'm probably going to take another look at it. And even though it's the lowest ratio, it's not a coronavirus stock. It's just one that has great ratings. It's 100% buy, and people refer to the CEO, Brian. In fact, let's see if we can find his name on here. Yeah, Brian Lian right there. They refer to this company as Brian's ATM. So once I started seeing people say that, and I saw the ratings and everything, I'm like, I have to get in on that for sure. So with that being said, we currently have about 2,500 in that, which is really good. And this one could bust at any point. We just don't know when it's going to pop. So We have it in a good spot. Now, prior, we had some sell limit orders for American and United. And this weekend, I decided, okay, I just want to take the oldest ones that we had here, which we bought early on in the process, United, American, and Norwegian Cruise Lines, and put a limit order on them, take the profit, small amount of profit, and free up the money. So it's about $4,500 right there, which we can definitely use. Plus, these two don't really have a big upside. In Norwegian, it's going to be a little bit of a longer play as far as the recovery because they're a ship. And then I thought, well, wait a minute. If it's going to be really slow in re-entering and people are going to be hesitant on going places that aren't sanitized, at least in the short term, Dave & Buster's, which is play right here, it's probably going to take a while to get back to its regular spot. I do believe it will. I think people are going to go back, but I think their operational plans are going to have to change. They're probably going to have fewer people in there, and they're probably going to change how they do things. So I still think it's a great stock, but I just want to free up some more money. So if we can add another $1,500, that gives us $6,000. And by the way, this calculation is incorrect. Yeah, about $6,000. We'll correct this one as well. Then, we position ourselves for better things. So a couple stocks we want to look at today. Yuko. Now, Yuko is one that if we look at our stock here, it's like, oh, you're looking and saying that's the worst performer. Well, yes and no. It's one that basically what this stock does is they basically buy oil futures and they pull off the arbitrage from 1 month to the next month. And basically, as long as the long and short of it is, as long as the future price for a particular month that they buy is higher than the current price where they're filling, then they make money. And that's kind of where they make their money. So if you look over the long term, they're very consistent. It's a slight upward trajectory. And I mean, they were much higher back. Wow, they were $2,400 back then. So yeah, who knows if it ever goes back to there. But if we look at just the common area, if you look right here, it averages about 400 and it's at 16. They basically got bit by those negative oil prices that we just saw recently. And this is where you had the stock reverse split happen. So that's why you see this flat here, because this is before the reverse split. So with that being said, as the price of oil goes up, well, first of all, the price of oil goes up when demand goes up, and companies order their oil 3 to 4 months out. And so as they start to see their demand start to increase, they're going to place larger oil orders. The demand's going to increase, and the glut of oil is going to start to dissipate, and then the price of oil is going to go up, and that's where you're going to see people flock to this. Now, what's crazy is I was looking at pulling an article. Let's go to news the last week, and I think it was this one. And so they're talking about USO in UCO, or the big two. So one of the things they wrote here is that, all right, so one of the things they recently did is they updated their portfolio so that they're in better position to be profitable and to make money. So, which is really good, very smart in doing so. Now, what's crazy is they said investors can't get enough of it. Despite falling 97% year to date, making it the worst performing ETF that we track, which just means that there's a massive upside. Yuko is seeing $2.9 billion in new net cash from investors, including $1.8 billion in the past 30 days alone. The smart money is getting in low. So I saw that and I nearly put in a limit order, but then I'm like, I already have them as my largest gainer. So if they want to get back to where we had this before, which is basically, let's see, if we want to get back to Yuko, and they were right around $400. If they go back to $400, let's call it $390 again, we're going to make $65,000 on this if it just goes back to its normal price that it's been historically, which is very possible. So I was like, I could throw more money in it, but I don't know. Maybe I still want to see it go up to 20, which we had talked 20 or 25, which we had talked about before. But smart people are throwing their money at this. So this one I have a feeling could have a massive, massive payday down the line. So we're going to hold off on that for now. But we're set up for limit orders. If the stock market goes down, we have 3 great stocks we're going to buy right here. And if the stocks go up, then we have a chance to fill some of these in the near future and free up some money to put toward other places. So with that being said, we are up on their current portfolio about 2,500, up 7%. And from our deposits, we're up 52% year to date. All right, and projections, the same thing. We're projecting somewhere around $197 that we're going to clear when this gets done at about 523%. So tomorrow, let's take a look and see what we have going tomorrow. And again, this is super early to look at. Yesterday, this was negative a little, this was up, and this was negative. So it's kind of the same thing. This is dead break even, up a little bit, and break even. So we'll look at this tonight and see how things change. But for the most part, it's, we're looking for a flat week for the most part, which I just think we're going to see. Since we are at the bottom of the curve, we saw the market go down. It's been pretty dead flat for the most part, no matter what the stimuli are. And at some point, it's going to turn up and launch. So with more states reopening, with more phases of each state reopening, you're going to see upward pressure on the market going forward. So with that being said, I will see you tomorrow.